Hello everyone, welcome back. We are solving 2025 Major paper. This is paper 1-1. Yesterday we did question 1 to 10. So this is the second part of the video. So we will be solving from question number 11 to 20 today. So let's get started. Question says, some errors were made when preparing a purchase ledger control account. The incorrect balance was 15,830. The following errors were discovered. Refund of 270 from credit supplier had been omitted from the control account. Number 2. The total of the discount received of 480 had been posted to the wrong side of control account. So we need to find out what is the correct balance in control account. Okay, so for that, let's prepare a control account here, a mini version of control account, just to show you that. So if we prepare a control account here, and let's say control account is a credit balance. So it has 15,830 in the control account on the credit side. What does it say is, first one is there's a refund of 270 from credit supplier. So when we pay credit supplier, we'll write it on the debit side because it will decrease my trade receivables, so trade payable balance. Okay, so when we pay payment, we'll write down amount here. But now what we are saying is, from this payment, supplier is giving us a refund, okay, of 270. So we need to decrease this amount. So we'll write it out here, refund of 270. Number 2. The total discount received of 840 had been posted on the wrong side of control account. So when we receive discount, we write it here. And we supposed to write this amount on the credit side, the debit side. But we wrote it on the wrong side. That means we wrote this amount on this side, which is 480. We wrote it here. But now this is incorrect amount. So what we need to do is we need to correct this. So we need to remove this from here and then write this amount on this side. So in order to do that, what I'll do is I will write this amount 480 on this side plus another 480. Okay, so first 480 is to cancel this amount that I have written out here on the debit side, on the credit side, and another 480 is to write the amount on the debit side. Okay, so this 960. So on the debit side, total is this much, and the credit side total is 960. So let's find out the difference. So difference is this total minus this, and 15,140 is my correct balance. So option C is our correct answer for question number 11. Question 12. A draft profit for the year of a business 84,000. The following errors were then discovered. 1. Discount received of 2,500 had been debited to discount allowed account. Then wages of 9,000 had been completely omitted, and the sales return of 8,000 had been debited to the purchase return account. Okay, so there are 3 errors. Let's understand one by one. So we made the draft profit of 84,000. So let's just create that here. Okay, so we made profit, and that is 84,000. Now the first error is there's a discount received of 2500. Discount received means income, and income is a credit balance, but we wrote it on the debit side, okay, of the discount allowed. So discount allowed is an expense and is a debit balance. So instead of writing it in income, we wrote it in expense. So all we need to do is we need to take out from expense and put it in income. So if we take it out from expense, which is the discount allowed, my profit will increase. And then when we put it back into the discount received account, my profit will increase again. Okay. Decrease in discount allowed, which is 2500 added to the profit, and increase in discount received 2500, so it is also added into income. Then number 2, the wages of 9000 has been completely omitted. So wages is an expense. So when we write expense, my profit decreases. So this is minus 9000. And then the last one, here it says a sales return of 8000. A sales return basically means expense. Sales is an income, sales return is an expense. Okay, so there's a expense of 8000 which is supposed to be here, but we wrote that in the purchase return account, but on the debit side. Now purchase return is your income, because purchase is your expense, purchase return is your income, and income, as I already told you, has a credit balance, but we wrote it on the debit side. That means my income is decreasing here, and so my expense is also decreasing by 8000. So if I correct this amount, then my income will increase and my expense will also increase, so they will cancel out each other. So this particular entry has no effect on my overall profit. So my remaining amount is this much. So 80,000 is my correct profit for the year. Option D. For question number 12, option D is our correct answer. Number 13, which item would increase the profit for the year? Number 1, increase in allowance for irrecoverable debt, decrease in allowance for irrecoverable debt, increase in prepaid rent expense, and decrease in prepaid rent expense. So allowance for irrecoverable debt, if it increases, then we need to add more amount to it. Let's say last year we kept aside 2000 rupees as an allowance for irrecoverable debt. Now that amount is increasing from 2000 to 2500 rupees. So this year we need to add more 500 there as an allowance for irrecoverable debt. So this will decrease my profit. It is a charge against profit. I deduct it from my profit. Okay. Whereas if the allowance for irrecoverable debt is decreasing, so last year we kept 2000 as allowance. Now this year it is only 1800. That means I can take out that 200 from those 2000 and keep it as my income for this year. So it will increase my profit. So first option is option 2, increase in prepaid rent expense. Okay. For this, let's look at one example out here. Let's say this is the start of the year, January, and this is the end of the year, December. Okay. And January means last year's prepaid would be carry forward this year, and December means this year prepaid carry forward next year. So let's say last year prepaid rent is 500 and this year prepaid rent is 600. Okay. And overall total rent I paid this year is, let's say, 1000. Okay. So when I calculate my total rent for this year, I would say Last year I already paid 500 for this year, so this last year's prepaid is my this year's expense. And this year I also paid 1000, so this is another expense for me. But out of this 1000, 600 is paid for next year, so I'm subtracting 600. Okay, so overall my expense out here is only 900. Okay, so that means my expenses will decrease. If this amount increases, I know this is not the question for that, but just to make this question easy, if this amount increases, prepaid rent increases from 600 to, let's say, 800. Okay, so in that case, my overall expense in form of rent will decrease. Do you see that? It was 900, now 700. So because it will decrease my expense, my profit will increase. When a prepaid rent increases, my profit increases. Okay, because we paid expense in advance, and when we subtract that from the expense, overall expense will decrease. So your correct answer for question number 13 is C, 2 and 3. Question 14. Sam was unable to conduct a physical count of inventory at 31st December 2024. On 3rd January 2025, inventory was sold to Abdul for 11,950. The cost of the inventory was 9,560. Okay, so he could not conduct the physical count of the inventory on 31st December, but on 3rd January he sold some inventory. Forget about the selling price. The cost of those inventory was 9,560. Okay, taken out from the closing inventory of last year. And then on 4th January 2025, inventory was returned by Sita. It had been sold on 21st December 2024. So last year in 2024, we sold this to Sita, and now she is returning it on 4th January. And the amount is 2,390, but the value or the cost of the inventory was 1,912. Okay, but when we look at this on December, we would not know whether Sita would accept or return the sales. Okay, so on that day we still consider that we sold these goods to Sita, and that inventory is not with me. Okay, Sita is only returning that on 4th. So if we take this into consideration, then we can calculate what will be the value of the inventory. On 31st December, the value of the inventory we don't know, that is amount X. Okay, and then on 3rd January we sold. So sold, and this value is 9,560. Okay, and then on 4th, Sita returned product. So this is, and then returned amount is 1,912. Okay, so after all this, value of inventory on 5th January is calculated as 59,750. Okay, so now let's go in a reverse process. Okay, so this is the value that we have after these two transactions, but we would not know that Sita would return the product, so we'll still consider this as sales, and this cost of inventory is not with me and is with Sita. Okay, and these sales that happened after 31st December, so on this day I would not know that I would make a sale on 3rd for 9,560. Okay, so I'll add it back to my inventory. So this will be the amount of inventory that we have at the at the end of the year, 31st December? 67,398, option C. For question number 14, your correct answer is C, 67,398. 15. Why does a sole trader account for accrued income? Accrued income is the income that we already earned, but we have not received the payment yet. So that means when we calculated my total income, I should include it as my income even though I have not physically received money. And that is as per the matching concept or accrual basis. So why does we do that? So that the profit is not understated. Okay, because this is the income I already earn, I should be including that. So your correct answer for 15 is D. 16. The following information is available for a sole trader's business at the end of the financial year. Cost of sales 540,000, expenses 325,000, profit for the year 63,000, and then the sales return is 30,000. What was the total sales figure for the year? Okay, this is very easy. Let me just put it in the format so that it's easy for you to understand what is happening in this question. So normally we write sales, and we don't know that amount yet. Okay, and then in this we subtract return, and then this return amount is 30,000. Okay, we subtract it from there, and once we get the net sales, in that net sales we subtract less cost of sales. And cost of sales out here is 540,000. So minus 540,000. And once we subtract cost of sales, we'll get gross profit. That also we don't know. And once we find gross profit, we need to subtract less expenses. And this expenses is 325,000. Okay. After we find all this, we get here. Okay. Now the question, profit for the year, let me write down the amount, 63,000. Now the question is, we need to go reverse. Okay, if I want to find out the gross profit, I will simply add expenses to find out the gross profit out here. Okay, let's do that. I'm putting minus because minus into minus is plus. So this should be my gross profit. So in this gross profit, if I subtract 325,000 as my expense, then I will get my profit for the year. So we just found gross profit out here. And then cost of sales is subtracted from the net sales. Okay, I forgot to do that part. Net sales part. So net sales part we don't know. So cost of sales is subtracted from the net sales to find out the gross profit. We'll do exactly same thing what we did just now. So this is my gross profit, and in this we add the cost of sales. So the net sales on this date was 928,000, and when we subtracted cost of sales from there, we got a gross profit of 388,000, and when we subtracted 325,000 from there, we got profit for the year. Okay, now we need to find out the sales. So sales amount was net sales, and then in that we add the return, okay, which is 30,000. So my my total sales for the year is 558,000. When we subtract sales return, I'll get net sales. When we subtract cost of sales, I'll get gross profit. And when we subtract expenses from gross profit, I'll get profit for the year. Okay, so I'm doing this on a reverse process, which is 958,000 is my sales. Okay, so your correct answer is 958,000, which is option D. So for question number 16 is D. Now let's go to next one. A partnership maintains both capital and current account for its partners. Which is the correct accounting entry for recording interest on capital for partner X? So here capital account and current account is maintained so that the capital amount remain fixed. This is called fixed capital method. Okay. Now all the appropriation of the profit would be recorded in my current account. Drawings, interest on drawings, and all the appropriation profit like interest, salary, then share of profit, everything will be recorded in my current account. Okay, so we can say our current account is another form of capital account. So if it is a capital account, then this also has credit balance. So when we received interest on capital, my current account balance will increase. So we write it on the credit side. Now this money is coming from appropriation account because interest on drawings, interest on capital, interest partner salary, and then share of profit will be given through appropriation account. So your correct journal entry out here is appropriation account is to be debited and X current account should be credited. So option B is your right answer. 17B. 18. Arnold is in partnership with Brandley. The financial period ends on 31st December. One of the terms of their partnership agreement is that interest is charged on drawings on a monthly basis at the rate of 5% per annum. Arnold made the following drawings during the year on the date specified. So these are the dates in which Arnold withdrew money from business, and these are the amount. They mention that we will charge interest of 5% but on monthly basis. Okay, very simple. Calculate the amount of calculate the month and then amount for each drawings. What is the correct treatment for the interest on drawings in the appropriation account for the partnership? Okay, first let's calculate the amount, then we talk about the treatment. Okay, because they also need to find out the amount. So from March 31st we withdrew. So from March 31st to December 31st we have 9 months. Okay, and then from 30th June 30th to 31st December is 6 months. Okay, and then from 30th September 30th to 31st December is 3 months. Okay, and the last one is 31st December to 31st December, which is 0 months. Okay, so here let's calculate the interest. We have 6,000 as drawings. Interest rate is 5%, which is 5 divided by 100. Now once you get this amount, we'll multiply this with monthly basis. So 9 months out of 12 months. Okay, I hope you understood this. So amount is coming 225. Second one, the drawings is 10,000. and this is also 5%, and we need to calculate on a monthly basis, so 6 months out of 12 months. So the amount out here is 250. Okay, last one, drawings is 12,000 and 5% interest for 3 months out of 12 months. So this is 150, and last one is 0 months, so no interest. Okay, we do not charge any interest on that. So let's calculate the total amount, which is 625. So option C and D is cancelled, A and B. The correct treatment for drawings is, or interest on drawings is, when we prepare the appropriation account, we will add back interest on drawings to the profit for the year. So it will increase profit, and then from that amount we will start distributing that profit into the partners in form of interest on capital, salary, and share of profit. So right answer is 625 added to the profit for the year A. For 18, correct answer is A. 19. Which statement is correct in relation to the financial statement of limited company? Number A, debenture are presented as a part of total equity. Debenture is a loan and not equity, so is a long-term liability. Then dividend paid is shown in the statement of changes in equity. So when we prepare the statement of changes in equity, all the dividends paid should be subtracted from retained earnings. Okay, but if there's a proposed dividend, we will not write that at all. Like question C, proposed dividend reduce the balances of retained earnings. So we do not write proposed dividend, so it does not reduce the balance. Only the dividend paid should be recorded. And number D, the gain from revaluation of non-current asset is added to retained earning. So revaluation of non-current asset is a capital gain, so we'll write it under revaluation reserve. And retained earning was created out of profit for the year, so it is revenue reserve. Okay, so this is the capital reserve, this is the revenue reserve, so we do not write this amount or the gain out here in the retained earnings. So your correct answer out here is B. We show dividend in the statement of changes in equity. Correct answer 19B. And the last question for today. A company provided the following information about its equity: 150,000 shares of $1 each, $150,000. Share premium 75,000, general reserve 125,000, and the retained earning 25,000. The director proposed to issue bonus shares on the basis of 1 share for every 3 already held. First one is the bonus shares. Second one, following this, the director intend to make a right issue on the basis of 1 share for every 4 share held at a premium of 0.12 per share. Okay. Then they are asking you what is the total equity of the company. Very simple question. We need to do this in 2 stages. First one, let's calculate how many shares company has. So 150,000 number of shares. So I have 150,000 shares. Each share value is $1. So divide that with 1, and then you will get the number of shares. Okay, which is, so we have 150,000 shares. We issued bonus shares. And bonus ratio, they say, will give you 1 share for every 3 held from 150,000 shares. So it means if you have 50 shares, sorry, if you have 3 shares, we'll give you 1 shares. If you have 150 shares, we'll give you 50 shares. If you have 150,000 shares, we'll give you 50,000 shares. And we issue bonus shares always at par, that means at $1 each. Now, the total number of shares after issuing the bonus share is 200,000. Okay. Then comes the right shares. Okay, and the right shares proportion is, we'll give you 1 share for every 4 held. Now after issuing the bonus share, we have 200,000 shares. So if we cross multiply this into 1 divided by 4, we'll get another 50,000 shares. We need to multiply the value. Okay, bonus share is issued at $1 each, so the value of this is still 50,000. Right shares is issued at premium, so 50,000 into 1.20. 1 is the par value and the premium amount is 20. So total amount that we are receiving after issuing this at at premium is 60,000. Okay. So this is the value of new bonus share. This is the value of right shares. The question was not asking you how much is the value. The question was asking you what is the total equity of the company after issue. Okay, after share issues. So remember that when we issue bonus shares, there is no inflow of cash. Okay, so whatever money that we have, same thing will be circulated. So we need 50,000 to give bonus shares, so we'll take amount from the share premium and put it into the share capital. That's it. So there's no inflow or outflow of fund. Okay, but whereas when we issue right shares, there is an inflow of money, inflow of fund. Okay, so here overall capital is increasing, or equity is increasing by only 60,000. So if we add all of this, 150,000 plus 75,000 plus 125,000 and 25,000, and add this new inflow of 60,000, this would be your new capital amount. Okay, 435,000. Now if you have not understood this, then let me prepare small account for your understanding. Okay, this is your shares. Okay, and this is premium. This is your general reserve, and this is your retained earnings. Okay, share is 150,000. Then share premium is 75,000. Then general reserve is 125,000. And your total equity is, retained earning is 25,000. Okay, and just calculate the total out here. This is your opening balance before we issue shares, or let's write down balance BD. Okay, and then we issue bonus shares. Bonus shares, so we are issuing worth 50,000 bonus shares, so we added 50,000 here. We take this 50,000 from my share premium. Okay, no effect on total. Then we issue right shares, and right shares also we issue 50,000 right shares. So par value is 1, so in share premium we'll only write down the par value. So 50,000 into 1 will still give you 50,000. And in premium, the premium amount, so 50,000 shares into premium, which is 0.20, that will give you 10,000. So we'll 10,000, we'll write it here. Overall my 60,000 is adding up here. Now we'll calculate the final total, and the total on the share is 250,000, share premium, general reserve, retained earning, and the total is this. Okay, share premium balance is now 35,000, general reserve and retained earning remain as it is, and my new total equity is 435,000. Okay, I hope this makes sense. So your correct answer for question number 20 is 435,000 B. So this is it for today. Hope you enjoyed the class. I'll see you in our next video. Bye. See you. Have a nice day.